Hi there. NIO, as you probably know, has reported the results for the first quarter of this year, 2024. And if you can believe, their numbers weren't that great. They reported a decline in the number of deliveries of about 3% quarter over quarter from the last year, Q1 2023 to Q1 2024. Last year they delivered 31,000, but this year their deliveries have declined a little to 40,000. Now, the biggest decline is from the last quarter, Q4 2023, when they delivered over 50,000 vehicles, but now a decrease of almost 40%, as you can see here. So the number of deliveries have declined from 50,000 to 40,000. And this is quite bad. Do you know why? The market was expecting that this company will grow a lot in the future, in the next years, as there is this trend from gasoline cars to electric vehicles. And also the analysts are expecting that the revenue of NIO will more than double in the future, from 9 billion to over 24 billion. Now, this may be in the short term. Maybe they will have 1 quarter or 2 quarters bad when they'll report a flat growth rate. But then maybe in the second half of this year 2024, the number of deliveries will rebound. They may go up to 50,000 or even more. If they can achieve that, then that would be great. The stock price will rebound from the current level of $4. But if the growth rate remains flat for the entire year, and this may happen, who knows, especially if you look at the interest rates. Now, of course, you also know that this company, NIO, sells its cars in China, where you have another environment. China is currently facing a crisis, but they are rebounding. And maybe so this company, the stock price of NIO. But don't expect that the stock price will go from $5 to $50 in the next 2 years, or maybe this year. Don't expect that. You might see another bump in the stock price, let's say to $10, if, only if, the revenue rebounds and the number of deliveries increases, the growth rate. And of course, they also report a profit. That can also happen, and the stock price can go to $10, and you can have a double. But be aware of the risk. Maybe their growth rate won't be that high. It will remain flat, and they'll struggle to survive because of competition, bad economic market, and other risks. For instance, if you look at their revenue, total revenue, you can see that it has declined year over year by 7.2%. This is quite bad. And quarter over quarter, a decline over 42%. So this is quite bad. You can also look at the loss from operations. Same thing. Quarter over quarter, a decline of 3.4%. And year over year, an increase of 9.4%. So this number looks a little bit better. Now, you also look at the recent developments. How much they delivered, as I said, a decline. And their sales has increased in May compared to April. But overall, the number of deliveries has declined. Another surprise is that they launched another brand, NIO, and its first model, L60. So besides NIO cars, they launched a new brand. And let's take a look at it. As you can see, this is their new brand, NIO. If you look at this car, it looks like Tesla. Of course, it's a different brand, different technology, and other capabilities. But you have to ask the question if this is the right strategy to create a new brand, NIO. They already have a young brand, NIO, that is not that well known. I think there are more people that know about NIO stock, this business, the stock price of NIO, but there are fewer people that know about this brand, their cars, NIO. So as I said, you have to ask the question if this new brand is a good strategy, especially right now at the beginning, as you are trying to build the brand NIO and also a new brand. You have to ask yourself this question, if this is the right strategy, to start with more brands at the beginning and see which one will be a winner. This also might be a good strategy to diversify their brands. I think it's better to have one brand that people know about it and to develop more models, not to launch different brands. Because this company has to invest in 2 brands, not only one. So the marketing expenses will go up. So that's why you have to see. Maybe this is a good strategy. Then they announce some investments in their NIO Power. And be aware that, as you probably know, NIO has that battery swapping technology. And many investors think that this is their advantage. I mean, one advantage of NIO, that they have this battery swapping technology. But if you read this paragraph, they are saying that they have forged strategic partnership with 7 automakers in China to promote the standardization and adoption of battery swapping technologies. What does this mean? Well, I mean, their advantage to have a swapping battery network won't be that important, especially if they promote this standardization and adoption. I mean, they might succeed to make a profit, but they'll have low margins, because other companies can easily create a facility where drivers can go and change their battery, swap their battery. Now let's continue. Maybe you remember my past videos about NIO when I said that this company has a good balance sheet. They have a lot of cash, of about 6 billion in cash. 3 billion plus 2 billion and restricted cash, in total 6 billion. But of course, if you also look at their debt and you add them up and subtract their debt from their cash position, you'll be left with, let me show you, with only 500 million. So they burned a lot of money. Last quarter they had of about 5 billion in cash, net cash, but now they only have 500 million, their net cash position. As I said, total cash is 6.7 billion, but the total debt is about 6.2 billion. So this means NIO is burning a lot of money. If you look at the revenue and especially at their losses, you can see that for the last quarter, Q1 2024, they burned over $700 million. So that cash they had has disappeared. They took on more debt so that they can expand and fund their operations, their huge expenses. As you can see, total operating expenses are over 800 million. And this is bad because they no longer have so much cash, and as they want to expand their business and also fund their operations, because NIO requires a lot of capital to invest in infrastructure, guess what will happen? Well, you'll have more dilution in the future. If you look at the number of shares from 2019 to 2023, you can easily see that the number of shares have increased from 1.1 billion to over 1.7 billion. And this number will continue to grow even more in the future. That's why you have to be aware of this risk, dilution. The company will survive, but shareholders will be burned, because the value in the long term will go down if NIO continues to issue more shares. So be aware of that risk. You can easily see in this image the number of shares, how it has increased over the last 2 quarters. I mean year over year and quarter over quarter. They had 1.6 billion in 2023, as you can see here, Q1 2023, and in Q1 2024 they reported over 2 billion. So the number of shares has increased a lot. Just look at the last quarter, Q4 2023, in December, they had 1.7 billion shares outstanding. But now, in the first quarter of 2024, they have over 2 billion. So they issued more shares. And this means the value of shareholders is going down, especially over time, if this company, NIO, continues to issue more shares. So, if you are planning to invest in this company, be aware that they no longer have a lot of cash, dilution is quite high, they keep issuing more shares, plus on top of that, you have competition. In China, there are a lot of competitors, such as BYD, Geely, SIC, and others. And international, especially in Europe, they compete with local auto manufacturing companies, and of course Tesla, and others. And be aware that in the US, NIO is probably not going to have any chance to expand in that market because of new tariffs. America's tariff increases on China. As you can see, for electric vehicles, the tariffs are expected to increase a lot, from 25% to 100%. New rate implementation year, 2024. And this is quite bad. Quite bad, because China won't have any chance to sell a car in the US. I mean, they can. Maybe they'll have some sales, but not that much. Because people, the final consumers, have to pay an extra price. This new rate of 100%. Europe was trying to do the same thing, but it's too much to lose. So, in Europe, NIO might have a chance. But of course, they also compete with local players. That's why you have to be aware of all of the risks. Not only their balance sheet, dilution, competition in China, local competition, and international. Yes, the market is expected out of growth ahead, as China EV market is expected to grow by 17% a year, from 2019 to 2029. If they can compete in their local market, yes, the revenue may more than double, and they may become profitable. If that happens, as I said, the stock price can double from the current level. But when you look at the risk and you see that massive dilution, no longer cash to survive, no profits, plus competition, you might want to look again at this company and decide if you really want to invest in NIO. So from my point of view, the risk has increased from the last quarter, and the reward is about the same. So it's up to you. If you like this company, you may want to take advantage. If not, if you want to pay attention to the risk, then you can avoid it. So that's it for this video, and if you have other questions, please let me know in the comments.